Hello, Jason here. Today is August 19th, and this is your aftermarket update. So, interesting day here, trading. It was the very last day of the September contract, and we were on the October contract here today, and we missed having a monster day by a couple of ticks. I'm going to show you here exactly how it looks. This was the original trade here today. Our original trade here was short up here off the mid spot of our center point. We added to our position down here at 61, and then we added again down here at 53. Once we added down here at 53, we did get a time frame move with the probability to the long side. So that did average us in about 11 ticks, give or take. Total, and we took ourselves out at 52.56 for a net positive on 4 lots of 11 ticks, give or take a couple of ticks here. And so the reason that we got out here is we would have been taken out at break even on this trade anyway, but we were coming close into the inventory report, and once we got this indication that the market may be turning around a little bit, we went ahead and pulled the trigger and got out. We did have the inventory report, and you can see that's this long bar right here where the number came out and the market began to move down very aggressively. We waited for our opportunity according to the OTG trade plan, and we did get short 2 lots at 93. So we came right up here to 93. The market went to 94 a couple of times, went up to 95, and then began to roll over, and we added at 79 here, and then ultimately the market came back up and took me out at 88 for a break-even trade. Now, what I want you to see here is that the market did reach all the way up to 92 and then flushed all the way down to what was going to be our target, all the way down here at 51. So a little bit of bad luck here. We got flushed out, or this could have been a monster day. So you only see 2 trades on here for me. That then took us into the European session close. My main objective here today is I wanted to get out of this day in good shape, and I was successfully able to get that accomplished. The reason that I wanted to get out of this day unscathed, if you will, is we had 3 things that were going on that would impact the market. Today was crude oil inventory report day, which is historically a crazy, wild kind of trading day. That's thing number 1. Thing number 2, you had the FOMC meeting minutes at 1 p.m. Central Time that was released today. And then thing number 3 was today was the very last day. It was contract expiration day here on the CL. So again, all of these things together do create for some uncertain price action. Just so happens we would have hit our target here. Had we not been close to the inventory report, this was our ultimate target from this short back here. But again, the one that was a little bit of a bummer was this one here, getting in up there at 41.93. If that had worked it out for us on the all-in, all-out strategy, we would have averaged in one more contract at 68. That would have given us an average in of 41.83, and that would have taken us all the way down to 41.51. And were it not for 4 ticks, we missed out on a 128 tick move. That happens. Again, that is part of the deal, and that's what happens when you are trading the inventory report. The other thing that I wanted to talk to you about here on this trade of the day video, this modified version of our trade of the day video, is I did want to go through and so you could see here. Let me show you this here really quickly. Okay. So again, this is pulled out of the statistics here today. Again, no losing trades, just the winner. What I really want to show you, though, is I want to show you that since we've gone through the paradigm shift and we selected to go through this paradigm shift of scaling in and all out 8 days before the contract rollover period. We've had 8 trading days. So basically, we picked the week of contract rollover to go through and make this paradigm shift. No better time than the present, right? What I want you to see over this 8 days worth of trading, again, this is not a Herculean amount of dollars here, 182 ticks over that 8 days. But what is important to note, I want you to look at this number right here, right? We are 30% winning trades during that time frame, 30% winning trades, and we've had 53% of our trades have been losers, and 16% have been scratch or break-even trades, and we are up 182 ticks during that time frame. When this number begins to become a more reasonable number, when we are not inside the contract rollover period and we get back up to our statistical norms, which is about 45 to 50%, once we hit those statistical norms, this thing is going to be, you're going to be very pleased and you're going to be very happy with the results that you end up seeing out of these. Now, comparing our winning to losing here, this is basically the same idea here. We've had 5 winning days and 3 losing days. 62.5% of the days have been winners. And that comes on the heels, again, of looking at the fact that we have only won 30% of our trades. Here's the real key to this. The average winning trade is for basically $559, and the average losing trade is $200. That is an average of 2.8% or 2.8 to 1 winning trade to losing trade. So again, just some statistics there to continue to reiterate the fact that this new paradigm shift is highly effective. Imagine what's going to happen when we get back again, like I said, to our statistical norms of about 45 to 50% wins. All right, so short, sweet video here today. As always, I want to say thank you for spending the time with us here at the Oil Trading Group. And until tomorrow, I want to wish you good luck and good trading.